Good morning, my friends, and welcome to the Breakfast Club. My name is Darren, and I'll be here with you guys today on Thursday, the May the 2nd. We're at May the 2nd already. Can you believe that? What do we got going on here? Display. There's no power there. Stand by. Oh, there you go, folks. I don't have power getting to the elusive camera today. Oh, well, I guess we're not no cameras today, folks. I don't know why my camera's got no power this morning. I think we had a bit of a crash here yesterday. Everything fell off the back of my computer. Anyway, let's get going. We won't worry about that. We'll just call that, we'll turn that off. I'll carry on the old school. All right. Sorry about that. Let's get to it. Make sure everybody's up and live. We're Thursday. We had enjoyed some Michael's live chat. He had a little he had to get that out of himself there the other day. I think he needed a couple of rants there. I think he needed to get out there and say his piece to the world and do a little 3-day seminar. Hope you all had a great opportunity to learn some stuff there, because I think he gave you some really good nuggets there yesterday and the day before. So I'm discombobulated this morning, all over the place. This is the Dixie on the daily and the hourly. So I've got really nothing for you on the Dixie for confirmation. Sorry, I'm just starting this a little. All right, that's me on. Okay, that's turned off. Everything's good. Tommy, welcome. My first one in, Tommy. Thanks for turning up, buddy. All right, let's start blasting through some of these. I'll leave NQ for now. Let's get into these other levels. So this is the thing I'm interested in right now, is this wick, this rebalancing of this immediate rebalance we had on the daily yesterday. It was a small range day, and all of a sudden it just took off, and we got a nice big wick. Small candle day, but big wick run all the way back into rebalancing this range, immediate rebalance. So if we take the wick and you take the high to the low in the wick and look for your 50%, which is sitting right around 50.90. And look at that, we hit 50.90 right on the button perfectly. So that's what I'm looking for NASDAQ as well, is this rebalance just of the wick that happened yesterday. You take that wick, and that's what we've got here, which is a perfect reversal happening right here. Body reverses below it. You don't get a chance to get into it here, though. You see that? Ugh, what an opportunity. So if this would have just closed a little bit below that, that would have been an opportunity to get that short. So you would have seen this drop below, and you would have waited for it to come back here, and you wouldn't have got it this morning, unless you're looking for that 50 as your high of the day for a continuation down to order block and this wick below price here. So there's a pool of liquidity sitting down here below these lows, underneath this here. So looking for further downside today, looking for this candle on the 1 minute, and we're looking for a continuation on the downside. I'd like to see these lows get taken out today. If we do run above the midpoint of that candle again, then look for higher prices. But that 50 is the key level for me as well. And you see how you take the daily here, and you take the wick of the daily. Look at that, we're just underneath the 50% for 38,326, 38,318, and we're getting a nice reaction off it. There's your reversal. Body pops below it right here, then pops right up into it right there. You have your entry for a short. What a beautiful return. That's a really nice 1 minute reversal, right at a place that you'd expect to see a reversal. So further downside, we're looking for further downside to get back down to these lows here. We're in FOMC, non-farm payroll week, so best to keep your powder dry. But if you're looking for quick entries, make sure you're low leverage and make sure your stops are tight. Protect your money. As soon as you start making some profit, move your stop into profit at the smartest and earliest convenience you can to protect your trade. Think about the back end. Make sure you try to really, if you're really good at managing the back end of your trade, using your fail safe or whatever methods, if you just have a regular trailing stop, then you can use that as well. DXY, it feels heavy to me. But again, if we didn't have an immediate rebalance or anything like that, so I've got nothing inside this, perhaps this candle right here. $105,988. That's the furthest upside I'd like to see this thing go. So that's the upside for $1. If we start breaking that, then we're looking for further upside. But right now, it just feels like it wants to come back into this range again. Okay. Looking for inside those squares right there. It's around the sticks. That's where my upside is for For that, obviously the downside is these equal lows down here. And then this little imbalance that's further down here on the Dixie, which would put upward pressure. So that would put downward pressure on euro. And then after 10, maybe we'll start getting a further upside. Same kind of mess in here. I do like this daily fair value gap here. This is the inversion now. So watch how we get response off this. We've been trading inside of it. My camera's not working anyway, honey. They can't see you. You look cute every day, love. Yeah, so see how we've traded up through this to validate, oh, we're going to go longer. It came back down inside, which we typically expect the mean threshold to hold. Then we gapped down and opened on the bottom of the inversion fair value gap. Then ran back up and through it. We're coming back down and tapping it one more time. So we've worked the inside of this range, this little fair value gap inside here, inversion. It's been worked quite a lot. So I'd like to see maybe or just a dip down one more time into the mean threshold and get some support off of that and start pushing higher. So if the Dixie does do a little pop up, we're seeing this run back into this range again, and then finally break through, start to roll over and go back down, then we'll look for higher prices on the dollar, euro dollar. The pound, we're in the same situation here. We've traded through it multiple times, back and forth. We're sitting right on that mean threshold or the consequent encroachment of that inversion fair value gap now, looking for another run up into here and this fair value gap on the daily. That'll be an inversion as well. So we're stuck between these two, looking for higher prices today to take this out. So I am kind of bullish, bearish. Where are we going on that one? Where are we hit for the Canadians here? So if the American dollar does go back up again, we're inside this inversion now, and you have this fair value gap below you. You're inside this larger range here. We've hit this order block, and yeah, I'd like to see this fill today. This is a larger one, so you'd have to take this one over this one. Look for the mean threshold of this candle. This will give us the mean threshold. So I like watch for a sensitivity around the mean threshold of that candle, and then digging into the bottom half of the fair value gap here. If we do get a push back up, I don't want to see the highs get taken before they come back to here. We're really between this candle here and this big candle right here. I suppose that's the swing point, but it's the lowest body candle in that little swing. Yeah, my target's in here today. Yeah. Let me put this as my upside. I wouldn't want to see it break that. That's New Zealand dollar. If the American dollar decides to head back down, mean threshold of this candle, and these equal lows down here. We could see a run one more time on these lows before pushing higher. So if the American dollar does do a quick little run up, I don't want to see this. This looks too smooth to me. Like they're not going to leave that untouched before finally going higher. And we've just wicked into the bottom half of this fair value gap you see here on the daily. See how we've worked the top half or the top quarter of it. We really haven't worked the middle or the bottom. We just wicked into those. So I'd like to see that run into here one more time before going higher. Australian dollar. We've hit the mean threshold. Love you, honey. Have a great day. We've hit the mean threshold of this order block here. If we come back and revisit this fair value gap above and look for further downside prices. If we're expecting the American dollar to go down, they should start pushing through this. Now that we've dug into the mean threshold of this fair value gap below us here. You see that? Let's just draw this out here. So you dig into the mean threshold. Now we're really between these two. And if the American dollar does come back down, and we get another retouch of this and push higher, I'd like to see it take out these highs and fill this fair value gap and start digging up into higher prices above us here. These equal highs look good. Maybe not this week, maybe today. Non-farm payroll. Anything can happen. So look for this fair value gap here, down here on the dollar, on the Australian dollar, on the hourly. You might get a revisit of this. If not, if that stays open, I'd like to see 65.09, 65.10 as the downside. No more than that. Japanese yen finally got some take back, came back to this order block, which is a really nice rebalance of that range of the daily candle here. Not range, the daily candle here. Nice rebalance. Now you're looking for 50% of this wick. If we lose 50% of that wick, look for further downside. And look for this fair value gap here on the daily. I would love to see this break this level on the downside. This could be the reversal already. We get below here, trade back up into this candle. If we get a body through here, trade back up into this candle as a wick for a short. Keep that in mind. Oh, look at that. Nice reversal here. Look at this happening on oil. This is a weekly chart. There's the reversal. Body trades below it. You come back up right inside it. You hit it perfectly on the weekly. And boom, you catch this entire week all the way down, digging into this order block. So like array to like array, we could lose oil all the way down to 73 bucks. Just look for each order block to give way. If we come back, find support at those, look for those on the downside to give way back into this area right here on the weekly. Inversion. So look at that for downside. Wait for this mean threshold to lose. And now what you're looking for is just a reversal to happen here on the dailies. Look at that. Right up into it here. You give it one more tap here. Drive for the lows, equal lows. 3 days, running down into that fourth day. Yesterday you would have taken out the lows, come back from coming into fill here now. So if this is going to go bullish again, it has to close above this fair value gap here for me to go bullish. Like a body, it has to close above that. And then back into this for high price. I'd like to see a wick down though. I wouldn't want to see equal lows sitting here. Mean threshold, keep that in mind for this. Otherwise, if we're still looking for further downside prices for oil, looking for the weekly objective down below, that's where I'm headed for 73 bucks. These are ETFs. You guys aren't interested in ETFs. Gold. We have a reversal here. Body finally drops down below it. See, for me, if your stop loss is up here and you're looking at this as the reversal and you take your last trade in here, or your first trade, last trade, whatever direction you want to, if you're calling this short, you would have got squeezed and then would have rolled over. So if you, for me, because this is a 15-minute chart, let's go to a, anyway, let's keep this germane too. This is a rule you can use on any time frame, so I'm not just going to custom make this. For me, I would have, as soon as it would have traded above right here, I would have been out and taken my stop loss off. And it wouldn't be until it revisits this one more time from the downside that I'd get in on it. So here's an example. You see the body trading above it here. I'd be out on that candle, so that would be my stop versus that. Then I'd wait, and then you see it starting to dig back into it again. You think, okay, this is good. Now if it gets below this, I'm interested in that again. So right here, you see how this one trades below it again. Now you go, okay, now I'm interested in going short off of that from here. As soon as it trades back up into it, right here, I'd be short right there. And then you'd be a little squeeze in here, which is the mean threshold again of that fair value gap here to go short. So that's how I wouldn't jump back in on that as soon as it tapped that. Unless you thought you were going to go higher. If you thought you were going to go higher and it traded above you right here, as soon as it comes back into your trade here and you decide now I want to go higher, and you see that it just hits the rejection blocks there and rolls around on you again and comes back down, you're looking for the mean threshold. If that gives way, then you're looking for further downside. So as soon as it starts to trade back into it, you think, okay, you can allow it to come all the way through. And if it does go all the way through, you go, crap, I'm on the wrong side of this. You have to weather all of that. Because you usually want to see just come back, tap it, and leave. Okay. I'll be right back. Okay, sorry about that. Morning, Dave. Shepard, thank you for coming. And Derek, good morning as usual, my friend. Thank you for coming up. Erica, was it the indicator you use for the sessions? What is the indicator you use for sessions? I use 3 different indicators. This indicator I've got right here is the ICT one setup for life and the custom sessions open prices. And there's a third one I use. I'll show it to you when I get back on the, it's the open, a new day opening gap, new week opening gap. So I hope that helps, Erica. Where are we at here? Oh, I've got 1 more minute. Jeepers. That's dollar index, banks. Oh, yeah. That's the open. All right, so we'll watch how the open happens in a second. Soybeans, we've got to return to this order block, looking for higher prices. These are equal highs to get taken on soybeans. I like to see it revisit this one more time. From up on high, come back down, tag this. Consolidation for CAM Model 1 entry for corn. If not, that's going to keep running. Look at this, equals a little pole of liquidity here and this fair value gap above you here. Sugar, sideways on sugar. Oh, that's a nice short right there off of coffee. Look for old highs. Look for this 200 in coffee. Cattle. Use this fair value gap as a jump point to go higher into this fair value gap. You're inside this range here now. Look at what we called cocoa last week. That was when, you remember that? I didn't just add that. You can go back and watch the video. We called cocoa for a short right here. And look at that. I don't know what that's worth. I don't trade cocoa, but if you took that trade where I gave it to you last week at 11,317 and cocoa is sitting right now at 8,080, I don't know how much that would have been worth to you in terms of contracts, but I gave that to you right at the perfect spot right here for a short. Man, I'm guessing that's a nice little trade. I don't know what that would be worth, but those who trade cocoa futures, you're welcome. Lumber still heading down. Looking for this to be, right now I'm kind of looking for lumber at the bottom at 487. Watch, see if they send a reaction at 487 on lumber. Lean hogs, we're back into the mean threshold of this. If we continue to lose that, look for further downside into a fill of that fair value gap below you here. If we get a reaction right off the level we're sitting right now in lean hogs, That could bring you back into the bottom of the fair value or a rebalance of this down close candle from yesterday. Otherwise, look for continuation down. But right now, I'd like to see if this has a reaction off of this back into the lows of Wednesday. Tuesday and Wednesday's low. All righty. So same thing I was talking about with ES. Remember ES? We're looking at that little perfect 50% of yesterday's wick. So today, I'm looking for the same thing. That'll put us just above those little mohawks, just above the fair value gap on the daily here. And that's 17,634. If you take the wick, just the wick yesterday of the run that we had, that rebalancing of that wick, if you take 50% of the wick, you're looking at 17,634.5. And we're getting close to that now. So that's where my objective is. And you want to see it pull back down into there. It's because I don't want to see it get above this high. I just want to see a wick up into here and a pull back quickly into this range and then start digging back down into a lower range here. We could just get another small range day here until we go into non-farm payroll for tomorrow. But ideally, that's the range. And so if we do get up there, I'm looking for a reversal pattern to form on the 1 minute. It allows us to get back and just manage it from the back end. That's pretty much what I'm looking for there. And we'll see what happens on that. We may not get that at all. We might just get a fill of that fair value gap that we just got right here. I think Derek was calling this one this morning. Good for you, Derek. Excellent call. We'll wait for the 10 o'clock. As Michael says, we watch the range that's set up now between the 9:30 open and the 10 o'clock. So the first 30 minutes. That's a perfect place for a reversal. Fill that fair value gap. Pay yourself a rejection. Old low. Liquidity sitting right here. That liquidity is taken. It's looking good. Looking really good, Derek. Good call this morning. Nice reaction off of a fill on that fair value gap. I think you took the whole range, did you not, Derek? Which is an excellent idea. You take the full range of where we're at from yesterday. Here's the difference between our two fibs. Go from top to bottom. See, 50% sits right there. It's 17,532. Oh, no, that's the whole range. What did he take? Well, that would be a lot lower. I can't remember which one you pulled from. Unless he's just, oh, okay, unless he's just looking at this one here. This range from here to here. Let me get rid of mine here. think that's where he's looking. Is that not where you were looking for? No. I don't know where, I can't remember where Derek was pulling his fib tool from. It does. Thank you very much. A little surprised to see price moving so heavy on Thursday before farm payroll. Anyone else? I did, and then it retraced, added another contract micro. I'm not nuts. Yeah, it's actually moving quite well today. So keep your eye on, now that we've taken out the low, you want to see, and the high's been taken out here. The high, the low. If this starts to push back up higher, to take that high out for 10 o'clock. That's the level I'm looking for, that I don't want to see it get above. This would be great. I'd love to see Derek's trade just rip off down here and start peeling lower, start taking out these lows below you here. I'd love to see that happen. Get down into this new day opening gap. So here's the other one, Erica. It's just called the new day opening gap. A new week opening gap. So you can use those as, you'll see them right here. I have them marked here. They create the new day opening gaps. I tell you, this could be a huge rundown. There's my prediction for the next level, 16,422. If we get this ripping through, I'm not trading on a Thursday, but we will sit here and read price action and encourage our friend Derek to get mucho dineros today. It was just a test of my theory of the immediate rebalance from yesterday, coupled with selling price at a premium. You're welcome, Erica. It's an excellent theory there, Derek. I love it. What is ES still giving us? Look at that perfect rebalance. Take a 50% of that. Came back up, gave us a bit of a squeeze, and slam. So if you didn't get an opportunity to get in here and catch this, you would have caught it on the run all the way up here. Would have gave your stop some squeeze, but quickly, no price did we trade. At no point when we went below it did we trade above it as a close. We just wicked above it, ran right up into the rejection block one more time, and then hammered all the way back down again. Very nice. And you would have just, that's quite a lot of, if you would have just had your last entry there at 50.86. It's 20 handles there. That's quite a lot in S&P. Finally took out the high. Look at how close we came to that 50% now. 38, 326, 38, 321. But enough to take those highs out. So one makes a higher high from 850. Lower high. Lower high. Okay, all these lows are taken now inside that bigger range. This is your it opened over here, didn't it? Closed here, opened here. Right into 50%. I'm just going to put this line up here. Oops. 636. Keep your eyes on on this level here. If we return back over 10 o'clock and take these highs out, I don't want to see it get above there. The fact that we've taken these lows out already before 10 o'clock. It took these lows out as well. The fact that it took those lows before 10 is a little concerning for me. That's 50% of the range from the open, regular trading hours. I want to see this close through here. Let me go my 1 minute. I want to see a candle get right through this now. I want to see it dig down, start really pushing hard now. And leave this all behind us here. But if it doesn't, if it holds off on this 50%, there you go. For the 1 hour, looking for this imbalance down here. Mm. 17,496. There's 17,496. Which is one standard breach off the states there or false. There's some pull the plug. I might take profit at 17,487 one contract. It's the high of the new day opening gap. Second contract is at the low of yesterday's PM session. All right, so we're through here now. Look at your imbalance right here. Just tapping it now. I'd love to see it get through 17,459, 17,455. Now I don't want to see big bold candles starting to get through here. If you get big bold candles, trade back to this. You're inside this range here. So you want to see this wick. You can wick up into here. But I don't want to see bold candles get through this. So you want to see that continue as a wick and then continue pushing down further. And for me, you'd have to break this guy above here. So ideally, you don't want to see that breaker get taken and then return to the breaker, push up higher again. So we're still continuing on the downside. And if you're looking at this small range here, you're looking at discount array, premium array in terms of like arrays. Be surprised if it did it today though. The deal is immediate rebalance is one of the strongest algorithmic movements, Michael says. Regular trading hours, we have a gap. We have a gap under the 5 minutes. Don't doubt the big mic is the chat of the day. Keep selling at a premium. Can you believe that stinker stopped at 17,488? First take profit 1 point below. One down, one to go. So now we're digging into this little imbalance here. I have my light on. Nobody can see me anyway. That's the consequent encroachment of that imbalance right here. So we do get reaction off that. We got 6 more minutes. On support at it. So the body breaks it here, comes back, found some support. Looking for further upside inside this range here now. Looking for a premium array inside this range. There's 50%, which just popped up above it, came back, found some support. So looking for 62% is right there. So if you're looking for a premium, you want to see you hit 62. Now you want to see this continue back down as an optimum trade entry to continue on the downside. You want to find support at the premium one. Now you want to see it eat through this, come through the other side of it, find some support here and continue down. That was your optimum trader entry drill. If it just comes down here, sits around the highs here, and then rejects off and starts to push higher through here, you want to see this one in the premium to hold, because if that gives way and you start getting on top of that, look for the highs and then reverse and then start hitting back into that range we created from the 930 opening to here. Come back inside. These are the optimum runs to go higher. You can argue both sides here, so I wouldn't touch this. You are looking for more downside though. We're looking for the rest of this to fill. See how you're starting it? We just ran to the optimum trade entry 62%. And you can't look at this one and say, if we say, yes, we're going higher inside this range, then you look for your anything above 50%. And what our PDRA is sitting above you at 50% right there. And that's right on 62. So that's the support you need. Now we're running down below here, which is good. There's a little fair value gap here. Get below that on a body. Here's 10 o'clock. Big candle now. You want to see something with some expansion now to continue pushing through here. Oh, I just snuck away from the in-laws. Are you sitting on the toilet with your cell phone? You have the water running. Just washing my hands. Bia, good morning. Derek's on fire today. Come on down. We're through here now. You got the liquidity sitting below you right here. Start taking out these lows now. That's the first one below you here. Let's see what kind of reaction we get off that next blue bar below us. Is that doesn't look quite like the middle. Why put that at those equals? Watch this inversion here, or fair value gap, I should say. I'd like to have seen that just come up and tap this 50%, which is this last down close candle in this swing. Takes out this little high right here. Now go down. Start dropping from here. Nice. See that little inversion right there? We just traded below it. Right there. Pop back up, tap it, take out the low. That's 15 handles right there. Or is that 10 handles? 40, 55, 15 handles in that 1 minute. Keep pushing. Keep coming. Yeah, I was just looking at that Wheelan idiot, and he just loves getting on that YouTube or that Twitter and just trashing Michael. Just loves to trash him. And it amazes me, all the people who used to be ICT people that follow him and that don't follow ICT anymore, and they gave up and they said it doesn't work and it's crap. And it's like, you got to be kidding me. If you guys would have actually stuck with this and studied this stuff, you'd see that it works, and it works all the time. It never stops, is exactly what Michael has been saying. And yet you got these morons that just say Michael's out to screw people over. He can't trade. And it's like, how much further from the truth can you idiots be? But it's nice to know that Whelan's attracting, he's you know, blobbing all those idiots into one little place, so they're kind of coagulating around. Stupid attracts stupid, right? So they're kind of clustered around him, and they're supporting that stupid idea that this doesn't work. So it's nice that he's kind of, all the flies attract to, you know, whatever. Gotta love it. Gotta love it. All the lows are taken. I love it. I stuck one of my those water bottles in the microwave. Well, not microwave. The washing machine, the dishwasher there, and I put it on the bottom rung where it's too much heat. It's right near the element, and it melted the mouth, the drinking part. I can't get the cap back on properly. Lows are taken on the hourly now. I want to see this continue pushing through this mean threshold of this last down close candle here. Excellent, excellent. Russell wants it to go up. Well, now you've taken out the hourly lows. You'd have to break this high here on a close. There's a slight little guy right there. I want to see this break on a close. Otherwise, if that continues back down, that's a nice little silver bullet entry short. And as Derek has said, always sell your premiums. Sell at your premiums. That's a premium array. See how you're split right down the middle between discount and premium. Silver bullet entry after 10 o'clock. You get one here. You can't get one there. You can't get one here until it comes back up, fills it, and it's above 50% of that range to continue going lower. If it does close above this, then it switches to a higher objective, which is this guy here. And that you're trading from like array to like array inside this range. See where this closes? It might just run straight up into here. So now that we've taken out this low on the hourly, you look for a reversal to come back up into the range. And this is the reversal I'm looking for right there. So we're back up into here. So we're between this one and this one. So one of them has to give way. So ideally, I'd like to see that breaker get taken, come back, trade into it, and continue to the upside. If this just kicks off of here right now or stays inside this, pull this one to here, and then reverses and comes back all the way back through this lot again. If you were short from here, stop loss goes there. As soon as that traded above that, you're aiming for the higher one, and you're so close. You literally, it traded above here, open, did not give you your entry to trade back into here, and it's a very small range to reach for when you're looking for a premium your discount array. Your discount one is right snug tight, or this little guy down here. So you want to see further upside prices from this reversal here. Now I'm bullish, I'm not bearish. If we eat through here, and you want to see a big bold candle get right through here now, come back, find some support inside here. And this fair value gap now to become support. You want to see a body close above here. That. You got all this. It can run back into here. I don't want to see a body start trading below here though. Otherwise we're back into the same range. Should have waited for it to get above here to confirm higher prices. I could just get real beat up here. Now that we've traded below this, back inside the smaller range, so back to here again and here. Out of that. This we traded body back through it, came back into here. That's the fail safe. You went up, you're going long, back down, you go short. So your trade should go enter in here. That way you get that fail safe at break even. I took it too close to the midpoint. So if it trades back above again, you want to get through here. This time I'll wait for it to take that high out and then come back into this. If it's going to go longer. Short, you're still inside this small range here now. You're between here and here. And you got this little fair value gap below you here as well. That little guy. Stretch it out a little bit. You'll see it a bit more clear. We've moved the mean threshold, the daily post or positive to not do more work lower until tomorrow, or at least the low. I just passed demo funded challenge 5% target after the last short and never thought I'd do it. Thanks, Darren, for inspiring me. Paul, I'm so happy for you, man. That's awesome. And Paul gets the customary. You get those in big bold letters, my friend. Oh, yeah. Yeah. Way to go, Paul! Yeah! Congratulations, buddy! Yoo-hoo! If I could get little stars and stripes and everything and all the stuff that goes with it, I'd be happy for you, right, man? I'd be posting that all. Wait, where's my little? You get carrots. Carrots galore, my friend. Carrots for Paul. Yay! Woohoo! There you go, Paul. Congratulations, man. He passed his funded challenge. All right. Way to go, Paul. Excellent work, buddy. So we're going to work all the way back into here. So now we're back in the disco block. This one, this one. You'll get it, Erica. You'll get it. Just keep studying the ICT material. Gotta study the ICT material. That's a good day for you, Derek. Good work, man. Well done. Derek pretty much called that from the high today and all the way into his objectives. So that's a nice little ride all the way down, buddy. Good. Well done. Didn't quite come down and tag that yet. What is that range there? Take out this high here. There you go. That's all you may need. push higher. Do. That's all you need. Body trades above it. Come back, give it a little tap. Lovely little entry right there. Well done, Derek. Have a great day, buddy. Have a great day, my friend. Well done. So that's our reversal. Wait for that fail here. Ran below me. Here's where my fail safe kicked out. Look for that breaker to get taken on the upside. It does. Trades back to it. There's your entry for a long. Now you want to see it start eating through these guys. Not just tap them. You want to see them blow through them now. See, when you find these lows, big lows like this, significant lows get taken, you look for these reversal patterns to happen. And that's what we're looking for. But we wanted a wick just to come down here and give us a little kiss. This one here didn't quite give us what we're looking for as well. And you want to see it run through this on the upside. So as soon as I saw that, I thought, oh, that's perfect. There's a nice little run. Then you see it come back here, think, okay, it can still come back into that area that hasn't touched yet. And it still did not give it to us right there. So then you got to wait for that one to get taken to the upside. And it finally took it right there. Body closes above it, comes back, taps it for a long. Back up inside this range. So you're looking for that fair value gap. So you pay yourself here. And if you get a retracement back down into here, this breaker one more time, or a retap of this fair value gap to go higher, I want to see it stay open though for, you know, a breakaway gap. That'd be nice just to see that come back and just leave this all open here. And you want to see it push harder through here now. We have taken out some highs. You want to see a significant high get taken with a, and look for your potential reversal. So if you do have this and you're managing this from the back end, let's say I would have stayed in that one as soon as I entered in off at the midpoint here. Let's say I would have stayed in there, dropped my stop loss down below here. And we've been managing this on the upside. You want to make sure your fail-safe supports your run higher. So you're always paying yourself at the premium, the next premium array. So your stop loss would be sitting right down here because you wouldn't want this to trade through this and come back into it for that potential swing that we've got here for continuation on the downside and start running back into this wick one more time. I don't think that's going to happen. I think it's probably going to run back up into a little higher here. At least take out this, dig into this inversion one more time. So if we break that high, this would be my stop loss would be sitting in here. Carrots right here. Ideally, we want it to go into here. It's melon carrot. So look for this here. I'd love to see that stay open or hit the mean threshold of that fair value gap here. Come for the carrot, my friend. Come for the carrot. I'm so happy for you, Paul. I think that's awesome. Oh, it's so good. This is what you want to see, is this thing provides some support here. Banging off of that. Yeah, it's giving you a level of support, but you're banging between these two now. My wife always sees moose on the way to work. You know, they're such an elusive animal, but there must be a small little gaggle of moose around there somewhere. And it comes into the schoolyard. She's seen more moose than I have in my entire lifetime. She sees them every time she goes to school. Not every time, but she sees it quite frequently. Coyotes. She goes, oh, I saw a moose today. Nice support off of here. Oh, it loves some carrot. Hit our carrot objective, the first one. Now we want to see it go blam through this thing here. Yeah, you don't want to see it snap off of that. That's not the sign we're looking for. We were looking for it. Now it's run back up in here and essentially filled this little guy right here. Discount array, which we didn't get, to premium array. Like array to like array, right? So if we go through this one, we're looking at a larger range. The next objective is inside this guy here. Fiddlesticks. What province? I'm in Alberta. Alberta. The mountains of Alberta. Are you from Canada too, Fiddlesticks? Aaron, how you doing this morning? Good to see you. Good to see you. Can anyone put me in the direction of learning Google Sheets to create a trading journal updates as I put in numbers, or so advised me to where to go? I don't have a lot of dollars to pay for one on trading journals like TradeViz, etc. Notions, Thomas. Notion. Has a free journal for you. Go to Notions there, Thomas, or I'll talk to you later and I'll show you the Notions journal that you can actually go to and add up. You can screen capture, and you can drop in charts. You can, it does a lot of grafting and all that stuff for you as well. See how we've come up? The bodies are respecting that right now. Boom, right on that. You don't want to see this kind of stuff happening. You want to see it eat through that. So we're back into this order block, mean threshold. So if you're looking at this range that you're in here now, look what you've got sitting here. So if we do get a retracement now, you're looking for a retracement back inside this range. You want this to hold price and start pushing higher. If it doesn't and it decides to go for a deeper run, you want to see that hold price now. 50% puts you at the top of these old highs here. And 62% puts you at the top of this old high here. The body wise. Still inside this breaker here. Those are the key levels. What makes sense? There's like 1, 2, 3, 4 key levels here, 5 key levels there. And they all line up with the PD array or the fib tool. So you want to see that hold and start pushing through. You're between these two right now, and we could get this banging around inside here situation going. But if you're looking for a retracement back into this range, you want to get a long discount again to go long, then you're looking for anything below this there's open and close here. Yeah, my day starts early. I'm at I get up at 6, which isn't early for some people, I suppose, but you're in Texas. Hire's in Dallas, Fort Worth. Nice. Some Texans. I picture your office has long horns hanging on the wall with shotguns crossed over them or some Winchesters crossed over. That's how I picture my Texan friends. I was down in Corpus Christi, Texas years and years ago. Man, that would be back in the 90s, I think. Looking at our 50%. Come on, just kick off of that. Run all the way back up. Give us some support inside there. Where's the motivation? Where's the carrot for some motivation? Come on up here. Also in DFW. Oh, Dale deleted his message. Oh, Dallas, Fort Worth. Dale's also in there. Gotcha. I'll be flying to Dallas, Fort Worth on Monday for work. Going to Plano. Nice. Got lots of people from Texas in today. Welcome all my friends from Texas. Should have gave that carrot a little higher motivation. It just came up for a nibble, and so now we're just sideways. We're gonna return our carrot sideways when we don't know where it's going right now. We got so keep an eye on those levels we talked about, the 50%, the 62%, the breaker, and you want this to stay open to continue for the upside. So if we bounce this here, it's 50%, 62% down here. Well, you have to pay yourself at those like arrays, from like array to like array. And the fact we made a comment about this and the body's not getting above that level. And then you don't want these levels to give way. See how the body gives way here, comes back, taps it, pushes through harder here. So all these are kind of like your support mechanisms. So your fail safe would have saved you for this. All this would be extra unrealized profit. If you're pushing for this high here and these highs and you left that, that's all unrealized profit. You're back down into where you started your trade, and you lost an opportunity to pay yourself at like array to like array here. Invariably, I want this thing to just hammer down, just start really driving down hard, and get back down into these lower ranges. We've got a lower objective down here anyway. So this is just a nice little continuation. Next price leg is here, 16,545. $16,545. Holding up on the mean threshold of this candle. When you're looking at the range, looking at your discount array, I didn't want to see this fill, but I guess it's filled. So if we blow through this candle here, we just came back and tapped the body. If we blow through that candle there on a close, you're looking for a deeper run back into that one that initiated this reversal that we have never hit yet. We still haven't hit it here, so we could see this deep retracement back into here. This is what Michael was talking about, those big deep retracements that can throw you off. So we found support there still. That PD rate and the premium still held. The breaker held. And we're continuing to dig down. So I want to see either this hold and start pushing higher now, or we might get that revisit of this here, or this little guy down here. Keep your eyes down here still too as well. So larger range. %50 puts us here. That's the fill of that fair value gap there. The little Mohicans, those little wisps through. You get a body close below that, then I'd say we're starting to dig down into 62%. There we go. Keep your eye on these two here and these little guys down here and get this out of the way. If we can adjust the settings on that back side. Background. Oh, that looks a little better. So dark now. Still haven't closed below the 50. A little more of wicks. Still the bodies are respecting that 50%. Look at that. Beautiful. Just those little hairs, those little runs on liquidity. This is good. Now you want to see it climb. You want to see it get right through here now. There's nothing in here. It's all been rebalanced except for this little tiny piece right here. Consolidation. The leg that takes out the consolidation. Cam 1, Cam 2, Cam 3. This would be a Cam 3 from here. So right with that carrot sitting right there. Cam 1. Cam 2 is about here. And 3 is right there. The macro begins shortly in 1 minute. Now, this next macro, you want to see this just hammer up. Now you want to really start climbing up. Start digging back into our fair value gap above us. You want to see this get taken on a 50% close. Then the Cam 3 model is done. if it closes above that, and you're close to your stop loss anyway. So if that doesn't hold for a cam 3 to go short, then you're looking for further upside. There's a cam 3. So you get that reaction off of there. Now I wouldn't want to see it revisit that. I would be pulling snap right into that. My stop loss would be right at break even right now for a cam 3. And you wouldn't want to see it come back through it. That's why. Because you're bouncing off of this fair value gap here. Those who want to go short again, you want to see this eat right through this and start aiming for it down here. Get right through here. Now I'll be moving that to there in profit and paid for my trade and just let it sit there now. Because I'm more biased for a high than I am a short. So if you were shorting that, I'd be sitting right there, trade paid for itself. Give yourself a couple of bucks and wait and see if that comes back up. You don't want to see it come back into here again. You want to see that just start blowing through here and start running through now. So looking inside it. So if you're in a cam 3 and you're looking for a profit inside that range, look for here. Start paying yourself inside this small little range right here. This should give way and we should start getting into here. And hopefully back into this guy here. I want to see it get into the discount portion of this smaller range here before taking that high. But I am biased long. And you probably just got taken out if that's where your stop loss was sitting, right at the rejection there. Would have come back and taken me out, but whatever. Still hasn't taken the high, so you're still looking for this discount array down here inside this small range. Even though we haven't broken that low yet, I still want to see it get down into here. Hasn't been validated yet. That one has. Master Trading, how are you? I haven't seen you for a while. How's things? We're doing good. We're having fun. This compressing range now. That's not valid yet, so as soon as we get below it, then validates it. For me, we're still inside that guy. And probably say this guy right here. Larger one. Swing, take that guy. You want to see this guy get below, at least wick below here, so we can start considering this the range, otherwise we're still in this range here. Oh yeah. You should have seen Derek's call this morning was he pretty much called it from high to the low today. He did an excellent job. Paul broke his funded account. He busted it up. Now he's got himself a funded account, which is awesome. So yeah, there's some people doing really well here. We've had a few people make their pass their funded accounts now. My wife is going to the zoo to see the polar bears, so perhaps that was the initiation of the day. That was the polar bear plunge candle. Took 9 contracts short on the NQ at the Open. Good for you. So you also captured the nice rundown today. Well done. Well done. So our fair value gap's holding here. And you're back through your, you want to see it close above this, where you got that cam 3. You want to see it close above that now. Gotta love it when your bias is still going higher. Close above it. I want to see it climb up, get above this one now. Okay, so now we're looking for this next one. I'm gonna get through this candle here now. Find support off of here. Whoa. There we go. So now you want to start eating through here. low. The low is 37.50. 38.25, so 0.75. And support off this high. This one's open. 22.50. Close 22.25. This becomes the breaker. Get some legs now. Up inside this breaker. You'll just slowly start eating through this here. Get through the mean threshold of that candle. Get back up on top of that. We'll just keep buying the discounts inside the range now to go higher until we get something that confirms our swing point. If we take these highs out here, which I'm kind of expecting we're going to do, that fair value gap becomes significant to me now. So watch this situation we saw here, run up, find support at this, deep retracement back into the range. You want to see this hold price and continue pushing higher. You don't want to lose the mean threshold of that candle, which we've come down to and tapped already. If you lose that, then you're looking for a further run back into this range here. Equal highs. Article Man, good morning. It is going well, my friend. It is going well. From the reversal this morning, 8:45, small fair value gap here, trade below it, trade back up inside it, short. Catch this breaker here, run back up inside those two candles for the breaker. Michael likes to add the two candles together. Found some support. Continue running all the way down to the hourly. Wait for the low of the day to get taken out yesterday. And then wait for a reversal. Here's the reversal. We didn't quite catch the reversal there. So you wait for the breaker. It takes out the low to get taken to the upside. It does. Comes all the way back up inside, all the way inside that breaker for a run back up higher. And now we're getting our carrot here. Good. Remember, anytime you miss, if you miss the opportunity to catch the reversal at this time here, like we're waiting for this wick to come back and tag us so we could get long on that and catch that long. If you miss that, look for the candle that makes the breaker. So it's these two candles here. Draw that out in time. And when you get a retracement back into that, you can catch that for the long. Your stop loss will still have to sit down here. And as you get that run back inside that whole area there for continuation on the upside. So there's your reversal. So anytime you miss these reversals patterns, look for the breaker. And always look, if you see one full candle take out two fair value gaps, trade the second one, not the first one. Now, what I'm looking for here, now that's a perfect fill. I want to see it get through here. If not, do we create another reversal pattern now that we've taken out these highs? And usually I want to see a body take out the highs, not just a wick. And we've got just wicks. And then create this reversal here. So if you're trailing your stop loss using your failsafe, your failsafe is always sitting behind the fair value gap behind it. So if this creates a fair value gap, you want to be sitting right here. That's a fair value gap, so you want it to be sitting here, because if you trade below it, come back into it, You're looking for a short there. You just subscribed, never seen you stream. Oh, you stream too. Where's your what's your channel, Methodical? I'm all for promoting people. If you're doing ICT stuff, I'm all for promoting my fellow people that are out there doing it live. Pop your channel up there. Show people what you do. If you've got a method of helping, you'll see me just trading a 1 minute chart. All I do is stay in price action as tight as I can, as long as I can, and I'll show you where it turns. And the little ranges that we're in. I like to pull the fib tool a lot. You'll see a lot of people in here. And we have a thing called a fail-safe, which is a different way to manage your stop loss. You trade inversions. Well, you're in the right place then, man, because that's what we do. We're big time into inversions. Inversions and reversals. Inversion, reversal, reversal pattern, inversion. It's mostly what I do here. And we have the power of the carrot, by the way. That's our mascot, is the carrot. So we've taken this high, we've returned to this fair value gap here. See that thing where we had that reverse fair value gap, break below it, come back up inside it. If you find support at that, you don't want to see this close below here, above here on the hourly, otherwise you're looking for further upside. This little inversion right here, that's what I'm looking at right here, and it happens to coincide with this fair value gap here. So I want to see this continue further to the upside, digging into this order block and these candles above us here. Because then we have this swing below a low, this inversion right here. If we get a body trade above that, that gives us a support, and it also blows this guy out because they're overlapping one another. You see that? This one is the bigger one. If we trade above that, find support at this one and support at this inversion here to go long, you could get a run back down into this area on the hourly to continue pushing higher. And that lines up with right here. So if we get a run back into here, mind you, we have to break that high there on a close for me. So our little carrot's got to get busy. See the support at that fair value gap? It's just a fair value. It's not inversion yet. Just fair value reclaimed. Find support. Start pushing. Come for your carrot. Aaron, very excited to join an ICT community. Well, I'm glad you're here, my friend. I'm glad you're here. And we saw, like yesterday, after Michael was doing all his teaching and preaching, we had a little live. We're doing it we're live, but we're not on YouTube here. We were live in the Telegram. We were just nailing it yesterday in the afternoon. It was tons of fun. Just catching these switches. You missed the 1 minute long off the bottom, this one? Yeah. So you see how these all become steps, right? These become the steps that support price. Breaker supports price. Premium array supports price. Reach for the next premium array inside the next larger range. You're getting inside of it. Now you break through it. Get up on top of the next one. Find some support. You create a fair value gap. Find some support at that. Start pushing higher. Eat through this. We got to get through this inversion on this side over here now. So if we pull this guy here. You're stuck in those two. This breaker you want now that you've got a body above it. Find some support at this, and I'll continue pushing higher. You don't want to see this breaker give way now. These two candles. I prefer this upside one, but yes, you can use both of them. That would put you right back into this fair value gap discount side. So you got premium, discount, premium array, discount array inside that one there. So let me get this one out of here and start getting it a little tighter for you guys. So if you're looking for that small range, you're in right here. %50 puts us right back to this old high and the top of this fair value gap. 62% puts you almost right at the mean threshold or the consequent encroachment. So if we do have a run back down into this range, you want to see this area here hold price to go higher because it's in the discount. So all it needs to pop into discount to continue going higher. And there's a PD array sitting right in there that would support that idea. So you constantly look at the range that you're in. Look at the PD arrays that are sitting there. That's the premium one. And this is the discount one. So if you're a price and you're looking for a quick run back down into a discount, you look at what array sits at 50%, 62%. Well, there's your discount one right here. So you could just see this pop right in here, just capture this, and then run back up. Or it could run all the way back down into this midpoint. I wouldn't want to see the whole thing fill in. I want to see that stay open. You'll hear Michael say that a lot about, I want to see something stay open. That's what you want to see stay open right there. So if you just get a wick in here and then whip back up and stay a body inside that area, that would be kind of nice. See a quick run down into here, pop back up. Kind of like that thing, right? See how it comes down? You want to see it blam down and shoot back up, get a nice little wick reaction off of that. Yeah, 19 seconds to do your damage. There you go. There's the 50%. Then you want to see it snap off of that. Six, 5, 4, 3, 2, 1. Ooh, now we're below it. See that? Come back, tap it. Gonna run a little lower. Maybe between these two. So you're like banging off of the both of them here. So now you got to go, where am I going to go? Am I going to run down for a little deeper discount because I just went over that 50, just into that range? Are we going to dig a little deeper down into the discount portion? Optimum trade entry to go long. That's what I was looking for off here. I wanted to see that pull back into that range quick, but either way, you still got your 50%. It just popped over. You want to see it stay up inside there. I don't want to see that kick off of that now and come all the way back down into here, which is what, it's what it's doing now. So let's go. You're inside there now. Let's get back up in there. %62%. 70% optimum trade entries. That's almost a full fill of that whole range. So just kind of watch those. Let me get this out of your way here. So you're into the discount. You got the 50%. Does this level hold price to go higher? You want to see that stay open now. So they're banging off this high here. Nope. So you close below. Inversion. If you close below, expect for lower prices. Ran back up. Close below again. Now we're running the full fill of that fair value gap here. That's 70%. I think that was a 70%. Yep, right on 70%. So when you're inside these little ranges and you see one here and you think, okay, it's trading below it, then think, okay, it's going to run down deeper into the discount array. If you blow through your discount array inside the range you're in, and your breaker's sitting right here, and that's where you just come right off the body of the breaker here. If that doesn't start giving you your support to go higher, see how the bodies are respecting the 50% we talked about? Wicks do the damage, came back into the body of the breaker. If it starts eating through this, then you start to go, oh, now this supports price to go lower. And if this one supports price, then we're looking for a deeper run back into the range. So watch the mean threshold here. Which is right there. Not a good sign. Further downside. So as soon as you get these inversions broken to the downside, come back up and they find support, look for them to continue down to the next PD array inside the range. And if they start to eat through the breaker like there, then you can expect to have some more downside run. Now, if you're in a bigger range, you could take here. Now, if you get above here again, I'm bullish again. That's about the problem when you get into these smaller ranges. You go bullish, bearish, depending on the inversion. The fair value gap that you get turns into inversion. We'd get up on top of this. Get us right into our rejection block. Want to get bullish again, you got to stay up on top of this. So this little reversal that we're talking about, that reversal above here on the hourly right there, looking for that reversal to get back if we're going to continue going back down again. If we get a body close above here to go higher, right now we're supporting this to go lower. And right now we've got this reversal above that high. Let me get this guy out of the way here. That reversal right there. Come back up, find support, continue down. If we lose this breaker, this is the one we go wait for the breaker to lose on the downside, find support at it, and then continue down. So watch this candle right here. So there's one opportunity here off of that reversal we talked about here. And that's the, for the hourly, you want to see that close above that to get it go higher. Or if it just runs back up inside this fair value gap here on the swing, then you look for anything right from the close here. Look for something on the lower time frames that supports a swing point here. And when we came over to here, we saw this guy sitting right here, right? Fills it right there. Look here and here. It fills it, pops above it, creates this swing point above an old high. Liquidity sitting here. There's your fair value gap inversion. Trade below, come back up inside. Stop losses here. Run down. If you miss it, look for this body to be taken out here like that. Now you look for an opportunity at short anywhere inside that candle. If you're looking at this one, you want a confirmation off of this one, body trades below, you come back all the way back up inside it, break below this candle again. So look for a return to that breaker's wick, body, Paul's looking at a 15-minute fair value gap inversion. This one right here. Here's a really dodgy one here. Here's this inversion right here. Body trades above it. You come back into it now, but you've already run up into this one. So your objective is to run from discount to premium array or premium array, wherever that one is. So if you're coming back into this, this would be your like one to go long. Now that you're digging into it right there, there, and there on a 15-minute candle. So you'd look for anything that supports a swing now going the other way if this is going to be your reversal to take out these highs and to run deeper into this range and head back up into that 50% of that yesterday's wick. You're looking for support there right now we're looking for a 1 minute reversal to support this area in here. Taking out a low. See how you're back inside that. Body hits it nicely, or wick hits it nicely. You're getting a reaction off of that. So if you're short off of this, that's your egg entrance right there. We talked about that already. So now you're looking for a reversal if you're on that 15-minute time frame over here. If you're on the hourly, you look for your hourly and stick with your hourly objective. So what is your hourly objective? If that's your swing point there and you've just come back inside it here, you waited for this to happen, you catch that, you're going short. And if you miss it right here, like we talked about, the body trades below it, and then you trade back up into it like we talked about right there, precision, and you're getting short. I'd have that sucker right up against stop loss would be right here right now. You'd be break even. Just because, you know, you got those higher time frame ones that are like a 15-minute one. You want to see that get blown on the downside. So that 15-minute one, it can come all, see how it's come all the way back to the bottom of it right there? We're almost touching it now. Oh, I'm hooked up in that one. So you want to see that come all the way down into here, which is 502 order block. And you want to see it start closing below that. $502. I want to see it start, yeah, start pushing, because we want to look for a run back deeper into that range now. So for you, Paul, if that's your inversion right there, you want to make sure that if you close below that on a 15-minute candle now, and you've got another 8 minutes to go, or another 12, 13 minutes to go, you want to think, I don't want to lose the mean threshold of this candle right here. If you lose the mean threshold of that candle, that's for me, that's your entry to go long right now. So if you're going long right off of 502, right there, you don't want to see a 15-minute candle close below that. So you'd be catching a perfect long from here, because you got a 15-minute long to a, look for your premium array 15-minute inside this range. You're looking at that guy right there. So another revisit of that high, and you want to see that candle get taken out on the upside. So here on the 1 minute, if that's our reversal, on the 1 minute, we're looking for it to close above here. To support that idea that that was the low, earlier 15-minute entry that Paul was looking at. I want to see this close above here now, and then start pushing up higher. Right there. There. Stop loss has to go down here. And take one right there. Perfect fill. Now you want to see that kick off of there and start hitting back up. If it closes below that and then pops back up into it, then I'm out. That's my fail safe. You could have done a third one there to go higher as well. And my wiggle room will be that mean threshold. And I want to see it start getting out of here. I don't want to see it just hanging out here. If I lose this here on the downside, then that, for me, that provides more support to continue to push through and look for this stuff down here. So I have to stick with my rule regardless of whether or not I get taken or this takes off on me. If that closes below that, or it takes out this mean threshold here, I'll let it go right to the rejection block. But if we end up starting to dip into this, the other point you have is your 50% of your wick here. And I like to keep inversions as my point of reference. So we'll watch for the imbalance right there. See, I don't usually like seeing all this waffling around here. Not usually a good sign. So now I'm moving this to here. I don't want to see it come down there again. This is too many times down into here. Now I've eaten through this order block. Not a good sign for me. So I want to see this come back into here, and then I'm going to close that out. Now, Look at that. That's right. As soon as you get out, that's when it starts to turn on you. See the bodies of the candles still respecting it. The wick is what shook me off. That took that order block there. And then we had no close. So I didn't follow my rule. I just got shook off by the wick. The body did not break the low. So if this takes off here now, I get to try and kick my own ass. But you'll get to see what that looks like with that's where it shook me right there. That's the telltale right there, is how much are you gonna get the damage done to you. As soon as it started popping in there again, like, nah, I don't like that. Usually you want to see something that's quick and clean. It just comes into your order block and then leaves like this. See how this body wicks up and then says, I'm out of here. That's what I wanted to see over here. Right idea. The wick got me. The wick squeezed me. You got to witness that. So now I want to see a body get above here. Come back and tap that inversion one more time. Well, if you're more patient than I was, Paul, I hope you caught that. You're absolutely right, Erica. That does count. You start getting into that lunch hour, but then you want to see lunch hour take out these highs. You want to see lunch dig up in here, take this stuff out. So those are two tiny losses for me today. So I said to myself, I'm not going to trade today because it's, non-farm payroll week. So here I was taking two trades. There's the mean threshold. So let's just see that if it kicks out of there and continues pushing higher now. Didn't like it hanging around either. Well, I hope you got to break even, Paul. At least you got to break even. It's a good call, though. I like the way you called that off of there. So you did get the reversal back into it quite nicely there. Did you take it right off the 15-minute inversion low? So you would have caught that right there. Then you would have been fine, because your stop loss would have been sitting down here anyway, or at least below the mean threshold of that candle. You're off these two now. It says like, hey, Darren, I give you 2 opportunities to get back in. Nope, you got me twice today, so I'm out. I will wait for another day. Follow your rules. And it's non-farm payroll week, obviously. So you got your discount array to your premium array. You just tapped it here, looking at for your premium to discount inside a small range that you're in. Remember, we're super scalping here. If you're doing a 1 minute, you're super scalping. You're trying to stay on price action every minute of the day. When it turns, you want to be on it right away. You catch the reversals on the 1 minute. You see them when the swing, everybody was aiming for their hourly low. You got it. Good. You wait for your swing to catch that on the reversal. You catch that on the 1 minute. You catch the reversal when it changes direction on you. You catch it when it changes direction on you again. You catch it when it reverses direction on you again and again down here. So look at the ranges that you're in. 50% is put you right here. So are you paying yourself at this point? And then you're going to your premium array, which is right there. So you're trading from discount array, like array to like array. Like array to 62% puts you right there on the bottom of that like array. And then you come back into your like array again, and now you get to go long again. So this is kind of that buffering thing we were talking about before, where you trade, take a piece off, come back, load it on again, take it off there. If it comes back again, load it on again, and you buffer your stop loss down here. If it suddenly rips against you, your stop loss is still sitting here. You've buffered a couple of times to offset any losses you may take if it rips back against you. Break even. Good for you, Paul. Well done, buddy. Well done. Three pushes higher. Yeah, I think the 3 pushes higher. I'm not sure if that's the daily thing that Michael looks for. 1, 2, 3. 1, 2, 3. Which one do you take in here as a push? Drive down low. 1, 2, 3, 4, 5. Like they were all significant previous lows taken out, right? Chop. You don't want to be in this shit. That's super choppy now. Yesterday was so much nicer. Look at this stuff yesterday. The afternoon got really nice. And 16. Reversal. Body trades below it. You come back up inside it. Stop losses here. You weather a little bit. You come back up inside it again. doesn't take the swing point. No swing. No swing. Let's open this thing right up. You get to see it. Low taken. Reprice, rebalance. Come back into reprice, rebalance right here. And then order block high. It returns to that. Body breaks it right here. Come back inside it right here. Low, swing, body gets above it. You start it inside it. So that gap down to give you the in to go higher. High is taken. Inversion. Body trades below it, but you can't catch it. Breaker that initiates it. Body trades below it. You don't get a good chance to get back in on it here. Taking a low. You don't want it to break above that. And it does. Comes back inside it here. High's taken. Swing here. Back up inside it here. Run the low. Take the low. Swing. Come back inside. Take the highs. Reversal. Order block. Back up inside the reversal right there. Then you take the low. Swing. Body takes it. Can't get in on it. Body takes it. Come back. Literally open up. Gap down again to the breaker. Right there. Take the highs. Swing. Takes the lows. Got to wait for the breaker. Otherwise the low is taken. So that one's not a valid one, because if you can't catch it early here and your breaker's down here and the breaker's actually set the low that you're aiming for, then you just don't catch it. That's no big deal. Deep swing here. This has to be all part of this, part and parcel together. So here, body trades above it there, opens there, trades back into the mean threshold here, takes the highs back into this one here that we hoping to get in on short earlier. You couldn't. You get it this time. So like array to like array inside the range. You take it, you're short. Back into order block and deeper array down here. Swing. Body clears out both of them. Remember I was telling you about reprice, rebalance. There's an imbalance sitting here as well. Takes out both of them. Come back inside the second one. Go long. Take out the high. Inversion. If you can't get it here, you look for the breaker. Well, it's way down here. You don't get that. You don't get this one. Swing point. Taken out here. That low is taken. You got the inversion there. Body trades just above it right there. Opens, taps it right there. Going higher. Body trades below here. Oh, here's an opportunity to see your fail-safe work. Body trades below here. You get back inside it here. And if a body trades above it, right there, if a body trades above it, you go, my stop loss is sitting here, and you go, shit, I'm on the wrong side of this. This is going to go higher. So as soon as this one closes, opens, trades back, gives you an opportunity to get out, break even like Paul just did, and then it runs higher, takes out the highs. You wait for the next reversal. So if it's this one again, because you got nothing over here except for these imbalances, I suppose, here, runs through them again, comes back up inside them. Now you can get short. Inversion. Body trades above it right here. Trade back into it here. And you're going long. Take out highs. See how this is very, very repetitious. And it's more successful than not. You know what I'm saying? And that's like every hour. And that's a 1 minute chart. And we still get our highs. Found support, inversion. Come back, found support. Remember I said it gave me 2 opportunities to get long. Didn't take it this time. Traded above that candle we were looking for. Body traded above it, came back inside. You know, I said I wanted to see it tap this one more time. It did twice. Continue higher. So hopefully you guys caught one of those. I got hit twice, so I've got to follow my rules and stay out. I got shook off right there. Otherwise, I would have nailed that sucker with a really nice trade. That's where you get beat up. That's where your psychology rests, right there in that wick, my friends. And my rule was never broken. You see that? The body's never broke that body. Just the wick, and that wick was enough to shake me off. When it ate through that, talk myself out of that trade. So hopefully you got to learn something on that. Oh, excellent. Glad you had a good day, Paul. So I hope you got something out of that. You guys got to learn a little something out of that. So anytime you have these higher time frame objectives and they hit your objective, just come down here to the 1 minute chart and look for your swing opportunity. And if you miss it, look for the breaker. Outline the breaker, and if the body closes above the breaker, you can get in there. You'll have to weather all the way to the bottom of the breaker. It comes all the way back in, right to inside the breaker nicely. And then finally peels out. And then when you get these retracements, look back for the 50%. So if you do see that swing, you go, oh, it looks like we're going to, if we have a body break below here, we've got a potential retracement back into this level and this whole range here. So you see a body broke below it right there, and you go, oh, okay, yeah, we're looking for a low price action to go lower. We have to wait for the body to close back above this again. So if you're long from here, you go, I'm going to take my trade off right there. Okay, I take my trade off and I wait for the next setup to go long again. So you pull your fib tool in here and say, well, it's a not logical level. Go to your other higher time frames, confirm like Paul did on that 15 minute. You say, well, that would be awesome if it could come all the way back into here. And then I can find myself a reversal in here. And here's your reversal. And the bodies respect it. It shook me off right there. And then your body's finally broke above. You get another one above. So I look at this one here and say, well, if I miss this one, what do I look for? I look for the breaker. So if you miss it, you get back in here and you'd like to see it come back and tap this just to get one more support. It did, and then continued higher and finally took out the highs. And you want to see it break above these fair value gaps. So it broke above it. You go, great. Now can I come back and find support at that? Barely. Didn't even quite tap it. Just tapped this old high right here. And then you see it break on top of it. Come back, find support at it. Continue pushing higher. Finally took out the rejection block, old high. So now you want to see this candle hold support all the way back down into that order block. So it's not, we're not form fitting this. You heard me talking about this as it was happening. And the reasons why, they all made sense. You stay on the horse. We're staying in price action. You're not getting shaken off. And you're using the higher time frames as objectives, the lower time frame to set your entry and stay on the horse. So as soon as you can read price action here and stay on, and you trust these inversions, you have to trust them or see them enough to trust them. And now the best way to do that is to go like this, squeeze your charts like this, and just go and just go ripping all the way back through your charts, a whole bunch of candles, and start looking for the swing points and look for those inversions. Look for the opportunities to take the breaker if you can't catch the inversion, and then see how they pan and look for the rejection blocks, old lows. Look for the breaker, look for the range that you're in and that you're trading inside those ranges as well, because otherwise you have to aim for your higher time frame objective. If you're looking to get in on the higher time frame objective right there and you find it on the 1 minute, trade your higher time frame objective to your next discount array or whatever it is. Because if you now start to go, I'm trying to find an entrance here, and at the moment I find these little reversals that start happening and throw you off, like that candle right there. If that throws you off and you go, okay, now I'm going long. As soon as it taps it, I'm going long here, and it goes, oops, all the way through you, trades through you, and you go, oh, I'm wrong. But your objective was down here 5 minutes still, then you're trading on the wrong time frame. You enter in here. If that's the time frame you're trading on, stay on that time frame. Otherwise, you'll get thrown off. You'll jump for every little inversion that you see. If it doesn't correlate to the time frame that you're actually trading on, and you're entering in here, you're actually trading on there, then you won't get suckered in on these moments, or shouldn't anyway. And if you like what we're doing, you can hit the like button. That's okay. Doesn't matter if you don't. I was laughing yesterday when Michael was saying people were getting chintzy with their like buttons. He had like thousands of likes, but it wasn't enough for him. He felt like it was people didn't like him enough because they were a little chintzy on the old like button. I don't know. Some people just find it. It's like, I don't know if I want to hit like button. That's cool. You do whatever. It's just a friendly reminder. If you like what we're doing, then lets me know that you appreciate what we're showing you today. And thank you for our new subscribers who turned up. I'm methodical. If you're still in here, I'll come check you out. When do you usually do your trades? Are you an afternoon guy? If you're an afternoon guy, that'd be perfect. We can all come running over to you and check you out. If Derek's not on, we'll come over and check you out. We'll send a bunch of people over there and check you out. I took a long at 17,496. 17,496. Good for you. Look at that. I hope you took it right off this 15-minute guy right here, because that's the swing. A beautiful swing. It was beautiful. It was an excellent, beautiful swing, but tears in its eyes. It came in and said to me, I got to go along. So it's like, okay. Sorry, that's a lousy Trump. But anyway, that's their nice reversal. So good for you, Jonas. Excellent, excellent run. Well done. So we've taken out that high. You see this reversal right here. See a high, see a reversal, body trades below it right there. You trade back up inside it right there. You're short now. Forget all this stuff right now. You're short. So you want to see this give way, and if you're in this range and you got this thing here above 50%, it usually cuts through this and aims for the fair value gap below. Just so you can see, staying on the horse, you got to be really observant of this stuff, right? See how the body traded below it right here? Right there. Then came up, stayed inside. No body got above it again. You traded below it. You're aiming for order block. You want to see that give way, and you want to start digging deeper into this range here. So yeah, I'd like to see that kind of roll over a bit now, to get bound deeper into this range here. So if you were long here and you see this old high taken, if you didn't pay yourself here and here, at least when you see this, you say, okay, that's the reversal. I got to pay myself, take my trade off here and wait for the next setup to go long, or you capture this one on the short. And if it breaks through the top of that again, I wait for a proper reversal setup like this. When you take out lows and you see that kind of reversal, look for your higher time frame objective now and see where could I be aiming for that would support price. That's an hourly or daily still. Let's go to an hourly over here. You're still finding support off this one here, but I think you got more. There's the tap off of that again. You're between this one and this one. What's my bias on NASDAQ short-term 2 weeks? Ooh, let's go to the weekly. It says war's on. War's on. Let's go to the weekly and let's have a little butchers in here, shall we? So kind of a, what's my objective? What's my thing? What's my flow? I marked this out last night. So that's the 2 week inversion, which we hit this week. And for the next couple of weeks, if this holds, you see we've already hit this weekly fair value gap. We traded through it. Now we're trading back through the other side of it. I wouldn't want to see this close above here. If Warzen, if we stay below this weekly, we stay closed below this weekly price imbalance right here, I would look to see this take out these lows, mean threshold of this candle here on the weekly. So you put this candle here and I do this. And I'm approximating this here. And this is how you do it for sure. So if we continue down on the downward trajectory, then look for these lows to get taken. Rejection block. Always look at the potential for the rejection block only to get hit 17, 18, 1 here. If we take that, look for this mean threshold of this down close candle here. If we find some support underneath this, right here, my overall objective downside is right here, 16,397. Let's see if this weekly gives me the same kind of a in and around that area. Next price leg down. That's where I'm looking for a war zone from here, anywhere inside this range here. Just look for downside. I'm still looking for bearishness in the NASDAQ for sure. I would not like to see that close above 16,999. 17.7 big figure. I'm just seeing this here now. I'm going to put these little lines in here. Keep my eye on that. What level's that one? 1676.88. Yeah, we want to stay inside this weekly inversion now. I don't want to see this weekly consequent encroachment hold price and then start running back up again. I want to see this start driving down here now. See what non-farm payroll gives us tomorrow. I'd like to see it close below 50%. Because right now you've got a weekly that traded below, then opened below, and then traded back above, back into obviously this little imbalance above us here. Nicely hit that. Then we've traded back from there this week. So usually this is when you say, okay, now I find support to go higher. And you look for imbalances up here, get through this fair value gap, back up into breaker that runs these lows. So two scenarios. I'd like to see it run down here, only because there's some stocks down here I want to start getting in on when it starts to hit these lows. May not get that until the summer, which is fair. If we do get a reversal and we close above this weekly fair value gap here, if we close above that and find some support, then looking for more. Then I'm looking for more upside on a weekly basis. I want to see that break that one as well, start pushing higher. But right now, you're kind of waffling between bullishness and bearishness. So where we sit, where we end the week right now, will give me a better idea, Warzone, of where I think price is going to go. Right now, it's kind of hard to say which direction. I know what I want.
what I may not get now that we've broken this high back into here. We may not get that, and I'm okay with that till summertime. But if we do close below this next week, I'm a little more bearish. Right now I'm a little more bullish, but tomorrow I could be bearish. It also depends on where we sit on that weekly fair value gap. See how we've got this inversion right here. We've traded above it. We've come back inside it. The bodies have respected it. That wick that usually does the damage, we ran back up through it. Now, if you're going to go like array to like array, where's the like array inside the larger range? So if we do go bullish, if we do lose this on a close, I like that. Well, I want to lose this on a close to go down. If we hold this and we stay up here on a close on the daily, and we're going to push higher, then I said, yeah, no. Then if we're looking at my arrays and I go like array to like array, we have a like array to like array, the one that started this whole thing off right here. Right here. And that's daily. That's an inversion now. No, it's not an inversion. It's actually fair value gap. Just a reclaimed fair value gap on a daily. Oh, sorry, no, it's not. It's an inversion now. We came back, reclaimed, then it went through it. So now, yes, it is an inversion. Sorry. Okay, so when it went through here, you see how it rolls through, comes back up inside that fair value gap there into the middle, kept hitting the middle, ran up. Now we're starting into the premium portion of that range again. Look at that. It ran all the way up, filled the fair value gap, then ripped all the way down. Then when we opened on this day, you heard me say, I'm ignoring this. I'm ignoring all of these candles. And I went back and I looked at each candle and I said, why am I ignoring this one? Well, this one hasn't been validated on the downside. When we opened here, this hadn't been validated, so I ignored that one. This one hasn't been validated to the upside, and we've already taken out the highs already. This one's not valid. We did take out the highs already, and then we traded all the way back to the mean threshold, so I ignored that one. Then we looked at this one here, and I said, okay, well, that one here is supported when we get below it. Well, we ran through the mean threshold of that, so I ignore that one, because we've already ran the highs out inside the range we're looking for. This one hasn't been validated. That one there, again, it's the new high. So that's the high of that range. So if anything, it would have to get above this candle's high before I started getting excited about getting outside that range. So all of these didn't matter because they're all sitting inside the fair value gap. So I just ignored all of this and said, inside here is where I want to see the body, and it traded below it right there. I'll go, all I want to see it do now is come back and tap the edge of this and then get short. And it ran just slightly above where I wanted the optimum entry. So you look for here for that swing point that we're looking for on the hourly and on the 1 minute that supports a swing in this area to continue on the downside. That's where my rationale came from inside there. So then you start getting your run below your lows. And you say to yourself, can I get in off the breaker that sets that run up above these highs, takes out that high there? Can I get in on that breaker right there? Look at that. You're just shy of it here. So remember I was telling you, if you miss this one, you catch the breaker. As soon as we get a body break below it, body breaks below it. As soon as you can trade back up into it, you get short. And it was right there. So look how short that was. So again, you look for the swing opportunity right at that point right there on the 1 minute chart. As soon as it tags that, which it didn't, so as it's starting to approach it, you're looking for a swing opportunity. So you go into a 1 minute chart right here, you'll see a swing that occurs right in there. If you don't believe me, go look. On Tuesday the 16th, the highest part of the day, look for a swing. Okay, and I'll do that for you in a second. So we're looking for a swing right there that supports a continuation on the downside. You also have that weekly objective we look for. It ran through the weekly objective, came back up inside, and again you're saying I'm looking for a swing inside a weekly or higher time frame objective running for a low. Here's another weekly objective. Then all of a sudden you see this starting to happen. You think, ooh, we broke above it. Now if we come back inside that, I want to see a support to go higher. It came all the way down into here. It opened on that and then kept trading down. And I go, okay, now you wait. You wait for the swing to go higher because you're expecting this to hold price right here now. So look in here on the 24th, or the 25th. Look for a swing point that occurs right here in your charts. After time is opened, trades down on the day. Look for a swing probably in London, New York, that occurs in here, and then wait for that swing to happen. Confirm you run up higher inside that. See how the bodies are respecting that? Hits that objective we're looking for. On this day, look for the 1 hour or look for the 1 minute, a swing to occur right off that higher time frame objective again for continuation. Now you say, you're just form fitting that, Darren. No, if you were with me on these days, you'll see I was calling these turn points. But anyway, you get to see the objective. So from here, discount array to premium array. So if we close above here again, we're still looking for higher prices. Like the swing low has been set. Now you don't want to see it close. If it closes below that, I'm back into discount again. And all we did was just this little run here was a run back into 50% of the range. Look for the range high. Oops. Range high to range low. 50%. If that's just your objective, to run back into 50% of the range, or the fair value gap that you're looking for, or the premium array, the higher time frame premium array you're looking for inside that range. Well, you still have this fair value gap above you here that we haven't quite reached yet, but you did break the 50% right there. You're just shy of the 62%, but you're inside that fair value gap weekly. That's just the daily and the weekly. Anyway, what was the one we were looking for? 16th, was it? Yeah, the 16th. We're going to look for a swing that occurs on the 16th inside this inversion here. So the 16th. One hour chart. There's our weekly. It's all super sloppy in there. Let's go to a 1 minute chart on the 16th. What is this one here? '16th right here. Okay, here's your run into the gray zone. Swing. Reversal. Comes back inside. Here's where I would panic. put your stop loss up here. Here's where mine fails. And I'll tell you why mine fails. I would have failed here. I'm not going to say I would have taken the trade here. If I would have taken the trade right there and it traded above me, right off that, and then as soon as it opened, it started coming back down, came back up to it, I'd be out right there. And I'd wait for a revisit of this level here, or the breaker that sets that run up. So if you watch right here, it trades above me, so I would be out. Stop loss still isn't taken. If you've got the cojones to wait and leave your stop loss sitting up there, you wait. That's not a swing above an old high, so, but it is a potential reversal. Not a reversal swing, just a change in direction. Price changes direction. Below, comes back up inside, continues back down. We have a swing. Price action here. Body trades above it. You come back inside it. You're aiming for higher prices. Order block here. You're still holding that. You got big cojones. See, I would have been out again here. Then I would say, screw it, wait for the breaker to get cleared on a downside body. So here's the downside body break right here, right there. And as soon as it returns to it, then you could get long off of the breaker. All that consolidation, if you weathered it with your stop loss still sitting up there, because there's your swing. At a time, in a place where you'd expect price to swing, like we talked about on the weekly. Ran all the way down. Sorry, where was my entry here? Off of the breaker right there. So what's that low? 17,862. So that wouldn't have been, oh yeah, 1863. So that would have been in. Reversal. Takes out a bunch of lows. Reversal right there. Opportunity to get in here, all the way down to here. Stop losses here. So if you're long from here and you see your reversal on the lower time frame, you'd be out here because you see the reversal that takes you out. So now you can go long there, back inside the range. You're sitting here. Back up to this inversion. That's not inversion. That's just a fair value gap that's been taken. I have to see it, what that looks like. Tighten that up a bit more. Highs taken. Swing point here. Fair value gap. Sorry, fair value gap here. Order block. Body takes it out here. Returns to an old low. Here's your next swing. New York's open. 10 o'clock. There's a nice clean swing. Takes out those highs. Did it take out this guy over here? Nope. It's still not taken out yet. So if you started your day off on 16th, or here we are on the 17th here. 17th, you get another reversal here. Trades back down. Body breaks below the swing. Comes back up inside it. Body does not get above it again. If you say, well, I'm going to wait this time for the breaker, body trades below that, you don't get an opportunity to get in on it. Not really a breaker though, is it? This would be the breaker. Run up here. Body gets below it here. Sorry, that's not the breaker. Running, it's just an order block here. Body runs below it here. Trades back up into it here. Continuation on the downside. Next reversal. Body breaks above it right here. Trades back to it perfectly here. continuation, run back into the range again, taking out an old high, reversal, but it changes direction again right here, body trades below it, comes back up inside it, continue on the downside into this like array, bodies respect it, look at that, nicely, come back up inside this breaker here again that ran out these old highs. If you missed it this time, it comes back into you, gets you that time, rolls over, takes out these lows, body trades above it, comes back, gives you a couple of tippy tappies to get in, to go long, up inside this one more time, looking for, you don't see that high get taken out again. Swing, body breaks below it, just changing direction, changes direction, comes back up inside, bodies do not trade above that fair value gap, now becomes inversion, change of direction, body change in direction again, consolidation inside a linchpin moment where it goes above, goes below, goes above, and every time it goes down below, goes above, you watch to see that is it supporting price now to continue to the upside, running from it inside smaller array to a premium array inside a smaller range. So you got to keep in mind your three different types of fair value gaps you got sitting inside that smaller range. Always think about the range that you're in. What was the other one? 24th or something, wasn't it? 24th. Starts here. New York time, 10 o'clock. We have a high taken. There's a small little swing point here. Body trades below, body trades above. Darren would be out. Wait for the breaker to get taken. Breaker gets taken here. Doesn't give me an opportunity to get in. Nope, doesn't give me an opportunity to get in. You have to decide whether or not you want to keep your stop loss there and whether this reversal with the body that goes above it comes back, body comes back into it again. Right there. Change in direction, support, continuation. There's nothing in here. That's 12:30, 1 o'clock. Consolidation. Breaker takes out low. Find support. And if you want to wait for something really clean, wait for a nice clean setup at a time of day you're expecting highs to get taken out. So at 10 o'clock, you're looking for a run on a high or a low, and wait for a swing objective to get taken and set yourself up for the hourly objective. Well, this is a 5-minute chart, not a 1-minute chart. Either way, you should still see the same thing on the 1 minute, 5 minute, 15, 30 second, doesn't matter. Let's move down to the end here. I think I've flogged that dead horse. I think this was the daily. That's a long drawn out way to answer Warsa's question. So you want to see this close below here today. We want to still see this hammer down. I want to look for downside prices. Weekly's given us that little linchpin area. So I want to see this continue pushing for our objective, which is down here. Order block. Swing. Takes out both of them. Comes back into the second one. Order block. Continue on the downside. Take out the low. Right back up into this breaker here. 15 minutes. You want to see it get through this mean threshold of this candle and this candle now. Take this low. Look for this fair value gap down here. You want to see this whole price. If we close above here, look for this as a swing and run back up into this range here. It's a change in direction. Right there. Look at this spot right here. We've got like array to like array. And see how you're in it already? You can't even key off this breaker here because you're already in, already reaching for the objective you'd be having, looking for this reverse in direction. You swept some lows. Body trades above it. Continue for beauty array above you. But you didn't get an opportunity to get in on that. See how it closed just below it, opened inside it, then closed above it, and then by the time you get to this this order block here, this breaker that takes out these lows, you're already inside your objective that you're looking for to run back up inside this range. So now if you take out this candle's inversion on the upside, then you're looking for further upside prices again. And looking for this, that you're going to be stuck between going long here and going short here. So if you're stuck inside that range and it's small, you wait. You've got a pool of liquidity sitting above you here, a higher PD array above, and an even higher PD array inside that larger range there. Inside the smaller range, like array to like array. Does this provide a level of support? Hit this old low. You want to push through here now. Bathroom break. I'll be right back. Filled now. Perfectly filled. So now you're between here and here. If you want to see more downside, you want to see this one hold, that one give way. So you'd get through his breaker first. This is where you go sideways, because you're stuck between two. 1 and 2. And now you have to have the patience to wait. Gotta go, you guys. The wife is giving me those eyes. It was great hanging out with you all. Darren, you're the best. Oh, you're sweet. Anybody have any questions on anything? Anything that you want me to look at? So we were looking for downside prices. If that was the upside, that was the objective there. So we were heavy on Dixie today. So that means euro. We wanted euro to go higher. Lovely. Reverse. Check. Nice. On a 1 minute. Let's look for our reversal on the 1 minute for the hourly. Let's look for this 10 o'clock hour here. $10. See this? 9:30. There's the 10 o'clock. This is the reversal you want to see, or the next one. And that's the only big fair value gap you see. There at 10:18. Silver bullet entry. Still doesn't give it to you here. I was going to say there'd be a nice silver bullet, but you didn't get it here. So you wait for this to get taken on the upside. It gets taken to the upside right there. And then we roll all the way over and come bang. Hit it right there. So you wouldn't have really entered in that trade till 10:45. Where you catch your first entry. And then you are where you are. Now, do you have the patience to recognize that and see this reversal at a time you're expecting a reversal to happen on the day inside this fair value gap here? So when you see it come down to that objective and you go on the hourly, you go, that's hitting that objective. I'm looking for any opportunity now to catch a swing reversal. So it came down right here, dip down into here, open on the day, open on this hour here, traded back down to here. So that's your reversal off here. So that's what you're looking for. So I mean, your higher time frame, use that higher time frame than your lower time frames to find your setup. Catch yourself on that run. And then once you've got that, you say, great. Now, as soon as I get above this, I'm happy. Ooh, lovely. Now you closed above that. That's excellent. There's a breaker here. If we can close above that, or an order block, if we can close above that, that'd be sweet. And now we're way up here above this fair value gap here. So this inversion here, you have stop loss. And don't forget, we got in where? What would you say we've got in? So if this was our point of entry right here, so we would have got in right around the midpoint of this wick. You would have caught that low right off of that, pretty close to that fair value gap. Again, revisiting that fair value gap close, and then continuation on the upside, and you would be in 2 hours worth of candy here. And you're looking for the rejection blocks above here, and then that rejection block above the top, old highs. Looking for a further push up here on the daily, and then taking out these equal highs, running for this fair value gap above you here. So again, once you've taken these highs out, you look for a reversal pattern to say, am I going to come back into this range, or do I get continuation on the upside? If you keep getting continuation, then follow the continuation and let it ride. Use your 5-minute or 15-minute to manage your daily trade. If you entered in on the hourly, or you entered in on the 1 minute, the hourly gives you your entrance. You look for your 1 minute entry. You take your 1 minute entry and use the hourly to manage your trade now. So if this is the hourly, there's the inversion. There's the next fair value gap. So you want to pull your fib up, or your stop loss up to here. Actually, you'd have to leave it down in here. If that's the inversion, you want to make sure that price does not change back, trade back onto that. You want to see that continue pushing higher. And as you get closer to your potential turning points, you can switch to a lower time frame and manage your, with your fail safe, you can manage your each fair value gap. Say one fair value gap behind the one above. So we're looking for continuation down here, which means euro is going to go higher. Looking for the highs to get taken for euro now. British pound, the weaker of the two. So there's your daily. Let's go to the hourly and see if we would have seen the same thing occurring on the fair value gap here. Came inside the order block, mean threshold. Look at that, mean threshold. Bingo. Holds it nicely. Swept these lows. So if you're looking at these PD arrays and you're going, that's holding price. Now there's a pool of liquidity down here, and I'm heading down. So if we could run this little pool of liquidity out and stay inside this order block here, the mean threshold is the line in the sand. I want to see it stay above that. And you see it run down and actually hit it. And you go, and you see a nice reaction off of that. Then switch over to your 1 minute chart. At whatever time that was at 1 hour. 10 o'clock again, strangely enough, hey? Let's take a 1 minute chart now at 10 o'clock. Here's your 10 o'clock. 10 o'clock's here. Then you see this low get taken out again with another low. And you wait. And then you say, there's that 1 hour breaker. Where's the 1 hour again? I think that was right. Here. It's the one we were just looking at. I'm sorry, 15 minute right here. I go down to the 1 minute chart. And you're looking for your reversal there, 1 minute chart. So that's the 15-minute. I think that was roughly the 15-minute mean threshold. So you're looking for the reversal to happen. So you're looking for this inversion or this little inversion here, this little fair value gap, fair value gap. When a body breaks above it right here, you're looking to get back in there. If it runs out the second one, look for the second one or the breaker. So if you decide to get in here, that's fine. You're starting to take are you taking profits inside your range? And I show you how to manage this with a fib tool. You could be scaling out profits in here, and if it comes back in to your objective once again, and those of you who haven't seen that, this is what we do. So if you enter in off your, let's say you entered in here, as long as you're below it, you're in a discount. There's your breaker. You enter in off the breaker right there, perfect. As soon as you get to 50%, take a piece off and move your stop loss into break even. So if that's where you entered, 50% break even. As soon as you hit 60% right here, you take a piece off. So that would have been right there. You take a piece off and move your stop loss into 50. So now all of a sudden you're in profit. Then when you move up to 60%, you move your stop loss into, or move to 70, you pay yourself again at 70, move your stop loss to 60. So you would have been there and you would have been out. Then it would have moved up a bit more and you'd be kicking yourself saying, what am I listening to Darren? What the hell does he know? Optimum trade entry runs all the way back into, again, a new optimum trade entry in this direction. There's 50% again. So you come back all the way back into your order block. This is that buffering thing I've been trying to teach people. That if you do get an opportunity to enter back in again here, which you usually do, if it hasn't been touched, you haven't had an opportunity to get in here and you're getting off of here, expect there to be a retracement back into that range that you can get an opportunity to get in. So you've buffered. So in other words, you've taken money out of your entry off of this guy here. You've buffered that range so that if it is a 72% or an optimum trade entry, you've grabbed as much out of it as you could. And then you move to reinvesting your entry again, like start your entry all over again, which is what you're aiming for down here. You get long right off of that low right there. And you're looking to get in on this one here as well, if you can, but you get in on that one. And then you pull your fib tool and you do the same thing all over again. 50% brings you to break even. Oops. 50% brings you to break even. And you wait. You're down here at break even. Then all of a sudden it slams up to 60% right there. Move to 50. Take some profits out inside that range. Then all of a sudden it comes back down again to breaker and then leaves. So fib tool is another way to manage quick, easy profits inside small ranges. So that's the British pound. At that optimum time of day, you're looking for that swing point to occur. So when you guys are looking at your trades, look at those optimum time of day, 10 o'clock, New York Open, taking out a previous low around 9:30, and then that return back into an optimum trade entry. And you can do more advanced stuff by trading the range, by doing the fib tool if you want, and then getting your opportunities to buffer. So when I say buffer, you're paying yourself inside here. It comes back down inside the range. Your stop loss is sitting down here. So whatever you've made in this, as you come back up into here, you're buffering that stop loss, which is what your original trade is that you want to get in on. You can catch this one for the run up into the range. When it retraces back into the range that you want, you've already made a little bit of profit. So if it does do a quick snap down, you're going to take far less of your stop loss is going to get hit. So your original 1% that you have sitting here, you get to put your stop, you put your first trade in here, 1% or 2%, whatever you're risking down here. Use your fib tool to pull out your trade. If it closes everything out, you've made money in here. Then all of a sudden it comes all the way back down in here and you get to load your 1% on again or your 2% on again. Stop losses down here. And you can either rebuffer this whole thing or just say, now I've caught my run. My higher objective is wherever my higher objective is for the day. Anyway, I hope that kind of gives you an idea. We have a reversal swing. Body drops below it, comes back up inside, squeezes the mean threshold. Body drops below, come back up, hit it again here, continue down. Look for this one to close out lower here. If you're running in here, you're looking for that as your next objective to pay yourself at. If you're pulling your fib tool, doing the same thing we just did in reverse now, 50%, you move yourself to break evens wherever your entry was here. Stop loss is there. You move to break even. It's a zero stress trade and you pay yourself a portion here. And if it goes to 60% here, which is a close or full fill of that fair value gap, take a bigger chunk off there, move yourself to 50% and you've got all that profit already. So just watch right here now. As soon as it hits that 60%, you take a portion off, a big portion off there, and move your stop loss into break 50%. So all of this is in profit now. You're not moving it there until that's been hit. You already paid yourself at 50%. That's what drives your stop loss to here. So you're just inside this smaller range right here. And you're not going to get a fill. So that's why you pay yourself at 50. Watch here. You may get another chance. Just back to that breaker again, that's all. We got our kitchen cabinets guys coming in today, so I might have to cut short. So your stop loss is sitting right here. You paid yourself there. So what you look for is these little swing points below swing points. And then you go, if it breaks that on the high, then I'm out. And that's what you have to be really vigilant of when you're looking at your charts. See that little swing there? Body closes above that. That stop loss that you've got sitting here, you pay yourself all of it right there. You take out and you got 14 seconds. If it runs you out, then it runs you out. And you've paid yourself down here. 2, 1. So there. Now you pay yourself. If it comes back down, you pay yourself. Now I close out our trade right there. Because now it's changed its direction. Right there. Swing. Change of direction. Reprice, rebalance. Now you're between here and here. Premium, discount. Like array to like array. See, that's how you save yourself on the using your failsafe. So even though your stop loss was sitting here and you paid yourself a little bit right there, you didn't quite get your 62%. Start trading against you. So you start going, where is this gonna? Right there. All right, pay myself there. You're still in profit for the rest of your trade. So if you took 10% off there or 20% off there, all 80% comes off. The rest of it comes off there with that upside objective. So now if it comes back up and hits this again, you've buffered all of this. And you put your trade in right here for a short. Or there's an entry for a short right there. If it fails and you climb above it, come back to it, break even. Right there is the entry. There's 1, 2, 3 entries. The ideal one is right here because that's the one you can break even on. If it breaks, it comes back into this inversion and then continues higher, you can break even on it and take, these would be small losses versus a full hit if your stop loss if it runs right through. So that's the stop loss. This is the fail safe. See, you got another entry for a short right there. This is that buffering thing I was mentioning before. What you took off here, what I was explaining way down here is exactly what we're doing right here. So you pay yourself there, comes back up in here, find yourself support because now this is going longer. You're between this one and this one. We talked about that and you hit it. And if that's the momentum to change direction and you think it's going to go lower, then you get another opportunity to get short right there. You hit 50%, move to break even, pay yourself again at 50% right here, and you move to stop loss from there to here. So you're right at break even now. You pay yourself here. If it comes back and takes you out, you just paid yourself a bit more. Now you want this inversion. Now that you've traded below it to provide support. So if it trades above it again, before it takes you out, you get out. If it trades above that, now it's traded below this, you want this one to hold price now. So watch that little guy right there. Boom. Okay, so now you've hit this. That's the line in the sand. You don't want that to go any higher than that. Now I would be moving my stop loss from there to there because now I don't want to see that get revisited again. If it does, then you're out. You're in this tight little range anyway. Yeah, like that. You're out. But now it's closing above here again. This guy here, if it closes above that spot right there, there's change in direction, change in direction, change in direction. And we're just looking at key opportunities that I don't want to see that go above that. And it came back there. So whatever your entry was in there, you made a bit of profit there. You paid yourself again at 50%. So you buffered even more out of that small little range. You traded, or you can see opportunities to get, not that you would actually trade this. I'm just showing you the price action that, you know, even in that perfect entry right there, and we gave it to while it was happening, is at 25.18 to 25.15, 5 handles. Not a lot, but 5 handles. And look at that, it gives you one more opportunity again. Tap. Now you want to get above, see how we've already closed above here? Chances are this isn't going to fit. This isn't going to hold. I'd have that sucker right up tight to there now. You wouldn't want to take any losses here. I don't trust these equal highs now. And you've got a swing above here already. Deep discount. Run above. Now I'd pay myself there if you're still in. It's like less than 3 handles. Not even worth it. But stay on price. Pretend like you're just staying on the horse here. You're not actually trading any of this stuff. You're just kind of staying on the horse. Kind of like what I've been showing you all day. Took 2 trades, talked myself out of beautiful trades way down here earlier in NP. So that little one right there, it's gonna run up in here now. It's above price. See, change in direction, come back, find some support, push higher. Array to array, you're in this small, tight little range right now. So you've gone from array, reprice, rebalance, all the way up into discount array, premium array, or discount array here, stop loss here, the premium array there. You want to see this one give way now. Like that. And you're looking for this British pound to continue higher. CAD, remember CAD? We wanted CAD to come down. Oh, look at you, Mr. CAD. That was the upside objective we did not want it to go through. It was good. Return to here. And we've just been down all day. Lovely, lovely. Go to your 1 minute chart. Look for the opportunity this morning at 10 o'clock. And I just want you to see this happens on all your time frames. It's a 5 minute. Let's go to a 1 minute chart. There's your 10 o'clock. High. Wait for the high to get taken. At 10:09, the high gets taken. There's your reversal right there. You see that? Wait for the body to take it out on the downside right here. Body takes it, comes back up. Poof, you're inside it. You caught it beautifully there, and you're enjoying the fruits of your labor all day with 0 drawdown. You're welcome. You're welcome. New Zealand dollar. You just have to see this enough times and you guys will see that it's magic. It's bloody magic, lads. It's bloody magic. Right. Look for the mean threshold of that candle. We talked about that today. So you're looking for an up candle. We talked about this today, saying we wanted to see mean threshold of this candle and then the high get taken out. If this mean threshold holds, then we'd go for another run down below these old lows here. That's pretty smooth. You don't want to see that. It's not going to get untouched. So look for this mean threshold. If this gives way to the downside, then look for these equal lows to get taken out again before going higher. If we close above this order block here, mean threshold, and we close above this on a daily, come back, find some support at it, look for a run up into this order block above you here and through the mean threshold of this candle and fair value again. Let's look at Mr. Gold, Black Gold, Mr. Texas T. Fair value gap is now filled. So same kind of principle. Look for this fair value gap to fill on the day. So we're just short of it yesterday. Today we ran down, filled it, and you're looking for this swing to occur right off of 1772. So 10 o'clock, 78.72. So say 78.72 at 10 o'clock. So we want to see 78.72, 78.72, 78.72 right in here at 10 o'clock. So looking at 78.72, it comes down, 78.76, 78. We're looking for this little reversal right here. And we say, oh, there's a low right here. If we take that low out, I'm looking for at 10 o'clock. Well, that is the 10 o'clock low. Okay, sorry. So you're looking for a reversal to occur at 78.72. 78.72 right in here. So we're looking for that to be broken. We start getting into here. We break it on the upside here. Come back, find support at it. We also have one sitting down here. Your stop loss is sitting right. Oh, you would have been taken. Nope, that would have been taken right there at 11 o'clock. So at this one here, you wouldn't have had that one because that one didn't trade above. This one traded. This one traded above, and that one came back and just tapped it for an entry here on that little guy. And yes, they can be that small. You have to know whether or not you want to trust that to go higher inside that range. Pull your fib tool and pull your fib tool on that and run that up and wait for that return back into your range again. If it comes back into here, right there, and you see the body trades below it right there. See that? If your stop loss is sitting here, that's your entry, and the body drops below right there, and you go, I'm on the wrong side. That's going to go lower. Pops back up, gives you an opportunity to break even right there. So your break even, you did not get your stop taken if you use the fail-safe method I taught you guys. Your stop's not taken. We get a new run below a low, a new swing point. We wait for a body to trade above here, right there. Trades back into it. You get long there, all the way down to here. Right there. There's your ideal entry. Because if a body closes below here, trades back into it, you're expecting further downside prices. So you catch it right there at 78.47. And where's that right on here? 78.47 is like as close to that freaking low as you can get. That's amazing. So there's your perfect entry. Jeepers creepers. You're literally 70.47 to 46. 1 penny was your drawdown. Once that was taken there, you get another opportunity there. 1 penny drawdown. Pull your fib tool at 50%. Move to break even. As soon as you hit 62%, move to 50. Let's just pull it on here so you get an idea of what, if you're using your fib tool as a method to manage that. So you pay yourself at 50, move to break even. You wait for 62. Hit 62 right there. Move to 50. It hits 70 right there. Move to 62. It hits 75. Move to 70. It hits 78. Move to 75. Look at this. Watch this. Then it goes slam to 88. You move to 75. And you're paying yourself along the way, by the way. And then all of a sudden it finally goes, boop, comes back and takes you out right there. You caught from here to there, all inside that range using that fib tool technique I showed you. And the 33 people that are sticking around to listen to this, thank you very much for sticking around. I hope you got to learn something here. I don't use open interest, and I don't use volume data. No such thing. Volume doesn't mean sugar. If you're an ICT trader, volume doesn't mean anything to me right now. And open interest does not affect me on the 1 minute chart. All I'm trying to show you is price action here. I'm showing you how to read price action, how to watch for reversals, and how to use inversions to time the market and how the market makes a change in direction and then breaks in market structure. That's what you're looking for. That's all I'm showing you on here. I don't use volumes. I don't use indicators other than the ones over here I use, so you know, the ICT one set up for life, and I use custom open prices, and I also use new day open and new week opening gaps and regular trading hour gaps. That's the only things I look for. Otherwise, I'm staying in price action. I'm trying to show you how to read and stay in on every candle, watching every candle, how it acts, and how to stay inside of a range and how to recognize the ranges that you're in, the PD arrays. If you don't know the PD arrays, you're going to be wasting your time in here, because I'm looking for ranges and the PD arrays that sit inside those and what justifies where the price is moving to. And it's not all hindsight. I just use hindsight to reinforce what I'm showing you on the 1 minute chart. So, Mano, sorry, I don't have any of that other stuff for you. That's retail, more retail minded stuff. Volume stuff is all retail. I don't use retail here. It's only ICT stuff. And open interest is ICT taught people how to use open interest, and that open interest data on bar charts. Go to barcharts.com if you want to look at open interest, and it doesn't affect how I stay in the charts on a 1 minute chart right now. It may affect your higher time frame premise in terms of your bias and direction you want to go. This, I'm just showing you how to find the optimum time, how to stay in the right direction on your entry. That's my focus today, is kind of highlight some of those daily objectives you're looking for: time, price, and for price action. If you can stay in on price action, you can literally capture perfect moments like this. And I have the fib tool. It's just my way of, it's not an ICT way, it's just my way of managing inside small ranges real quick. You guys don't use any of this stuff. You're not interested in that stuff. Gold, gold, gold. Where are we going? It's a 15-minute chart. Relative equal lows right here. We do have a swing point here below this old low. Body's respecting it. Swing, you're taking that out. Your overall bias looks like it's down, but I'm going to pretend like this isn't here. Let's look at this as a swing. So we took this swing out here. Watch. See how the body trades above it right there. See that? And yes, it is that small. And yes, you have to be that vigilant. See how it trades above it? You go, okay, now that's going higher. Comes back inside. You wick down like a bunch of times. Then it finally takes this high out. And it's the most immediate high is what you're aiming for. Takes that high out. Then all of a sudden it just goes slam right back through here. Stop loss is right here. That's why you pay yourself above old highs or rejection blocks. And if they're that close, you may think, that's bullshit. That's fine. I don't care. That's your first objective, is rejection block and then the high. And if you're into splitting the wicks, then 50%, 25%, whatever you want to do on that. Most people want to look back at inside the range, pull your 50% of your fib. Anytime you break a high, pay yourself. If you pull your fib tool on that, you wouldn't have got anything. It would have come back against you and took you out completely. Took your stop. You would have taken a full hit on that. So you wait. There's no setup in here for a reversal. You just have that, what you thought was a reversal. If you didn't pay yourself at that high, then you just got your full stop taken. So let's say you did. You did not pay yourself there. You took a full stop from entering in here, here, or here. You get your full stop taken, so you wait. You've taken out more lows. You get another reversal here and here. When the body trades above this one, you want to get long. It doesn't come back into you, so you wait for this one here. And don't forget, our objective is we're aiming for the first swing point high here or here. So you're already into the premium portion of that range, and you want the discount. So you want to buy at a premium. So you say it's right here. Yeah, it came back. It took you in. Are you happy with that? Inside that range, buying a premium, or do you want to wait for the discount? Or do you have the patience for that on a 15-minute chart? Or are you just saying, okay, now I'm going to run back up. So you're in profit from here. You're in profit, and now you're getting squeezed. And you're in a premium array inside this large range here. You're in the premium of the premium. So this is the premium, premium of the premium, discount of the premium. You came down into discount of the premium right here. So you have to sell at the premium of the premium if you're inside that range. If you're trading in here and you're buying a premium, you better be buying a discount premium to run to a premium to get yourself out. Do you understand? That's how you have to look at those. If you're inside these, if you're buying a premium in the, if you say, okay, I'm in here, I'm going to take that. And I put my fib tool on that whole range and say, oh shit, I just bought in a premium, but I bought in the discount of a premium. If it runs up above the 50% into an array that I like, which is this order block, and I can hit the mean threshold of that, I'll take money off there and I'll move to break even in case it trades back down against me. If it takes off, then I'm going a different direction. This is more advanced thinking, and you have to be prepared for that. I'm not trying to custom say you have to take these all the time. Take them when they are giving you a discount array, because now you look at this. This is a discount. You're in a premium of a discount right here. Premium of a discount. I want to buy this one. So do you want to wait there? If you don't want to wait there and you want to buy that one, then you better be prepared to trade in this range. Because if this is a bull flag, retail thinking, bull flag, and it takes off on you, then great. You won't get this, but you did get some profits from premium, discount to premium in that premium range. You got to think along those lines. If you're buying premiums, you better buy them in a discount and get into the next level and get out, because you're inside a small range bouncing around here. And if that bull flag gives way, you're going to get drawn underwater quite a lot. And then if that low gets taken, you're really screwed. And you're going to think, oh man, I could have paid myself inside that premium range. Anyway, something for you to think about. Is that not delicious or what? Is that not delicious? Swing right here. There's your inversion. Bing, and away you go. It keeps repeating over and over again. I'm telling you, this is how you stay on the horse, folks. This is how you stay on the horse. This is how you stay in price action as it's happening. And 29 people in here. All right. People are losing interest. I'm out. You guys have a great day. I hope you got to learn something. I hope you got to see some proof that price action works on a 1 minute chart, that you can stay inside price action and you can see when price is moving from one direction to the next through these inversions and these fair value gaps and swings. If you keep those in mind, and we're here every day, unless Michael's doing his thing, then we all kind of like gravitate over to listen to the boss, see what he has to say. And then we get back in the charts and start playing again. So I hope you guys got a chance to learn something. Even in this consolidated crap here, you did get to see some awesome entries and some awesome price action. It was great. You know, you get to see some cool stuff here. Keep your eye on that little piece right there. You want to see that give way, find some support at it, start running, and you want these two to give way. If you don't get in on that one and you wait for this, wait for a body to trade below it, come back up inside this and start trading back into this range here. First range, second, third, just pull that whole thing. If it closes above this and then keeps coming back up, it's just coming back in to fill the fair value gap and pushing higher. Anyway, I hope you guys enjoyed yourself, and I'm out of here now, and I will see you guys for non-farm payroll tomorrow morning. Should be fun. And then in the afternoon, we'll probably get some hits. We can trade after non-farm payroll's done and it's calmed down a little bit. We might be able to get in some stuff in before lunch or just after lunch. But until then, I will see you guys tomorrow. I'll try and get my camera fixed, and I will see you guys tomorrow. Take care. God bless, and have a great, great day.